You are listening to chartingwealth.com for Tuesday, the 5th of July, 2016. Hope that you had a wonderful, or maybe you're listening to this a little early and you're still enjoying a wonderful 4th of July holiday here in the United States. Where do we always start? We always start with the total market, what it is doing. And what's amazing is the total market has almost recovered completely. In fact, on the daily chart, it shows a complete recovery. 2-day chart, not quite, but the market has moved up significantly after that big 2-day down candle on the 27th. That is ending on the 27th of June. That represents both Friday of the prior week and Monday of last week, the 27th of July. What happened? Well, of course, the market took a big trundling down after the Brexit vote and then moved on throughout the rest of the week to recover. Where are we? Well, on the daily chart, we're still below we've got both a negative derivative oscillator and we have a negative MACD. It is below the red signal line. It does appear to be converging a little bit, but again, it has not crossed going up at this point. And of course, what do we do here at I almost said free stock charts, at chartingwealth.com? We still call that a down move, and sure enough, it is. Now, is it going to recover completely and start moving up over the course of this next week? We do not know. We are continuing to watch. Is it a dead cat bounce? It's been a long-running dead cat bounce if it is, so I would say no, but the market can sure continue on a down move. If you've not already listened to our weekly review and forecast, you need to do that because we talk about what the weekly chart's up to and the weakness that we see potentially in that chart. All right, and of course the weekly, you need to know where the weekly is whenever you're charting anything. It's the biggest wave, and everything else being equal, the market tends to move in the direction of the biggest wave. It's the biggest wave we look at. Sure, you could look at the monthly, the quarterly. Problem with those is I just don't find them that helpful. I find the weekly to be the most helpful, and we do here at Charting Wealth of the biggest charts to look at. You could add in perhaps a 6-day, 8-day, but again, when they get that big, it's hard to really see a lot of movement. So what do we see going on the 4-hour chart? Remember, we're in a confirmed down move. 4-hour chart continuing to rocket up, although over the course of Friday, the 1st of July, the market really sort of slid sideways. So we shall see what we shall see with that. It did actually cross over the 2-day trend line. Not much of a trend line. It's almost horizontal, but regardless, we tried to draw something. It is above that. Crossed over going up on the 4-hour chart back in the afternoon of the 29th, Wednesday, the 29th of June, and has continued to move up actually starting Tuesday morning, the 28th. So that is where we are. That is a good rollback if indeed the market rolls back over and starts going down. If this sideways slide continues and it drops over, great. Look for a good entry point and jump in. So that's where we are on the total market. Now, let's go back to our 2-day chart and take a look at what's going on. Oh, for the record, total market up on Friday, 0.23%. S&P 500 up 0.21%. Looks somewhat similar to the total market, still below the MACD, and the derivative oscillator are still in the negative. MACD has not crossed over the signal line. Does appear to be moving toward it, but that hasn't happened yet. Have a green open box candle for that last 2 days worth of movement, ending the 1st of July with a long wick on top. That, of course, with our Hinkin-Ashi type candlestick, shows a lot of uptrending. So we shall see. Again, still though, the power over the market is a negative bias. Let's look at the 4-hour chart. Again, sort of flattened out over the last day on Friday. Continued up movement, strong up movement for these mini candles. 1, 2, 3, 4 full days, of course, Tuesday through Friday. Now, let's just continue to watch as we get into the new week. Lastly, as far as our indexes go, before we get to gold, we go to the Qs. What is the Qs? Well, that's the NASDAQ 100. Of course, SPY is the S&P 500. The NASDAQ 100 are technology stocks. What's it doing? Well, it is still in the negative like the others. Derivative oscillators lost some of its downward momentum. It's pegging on a 2-day trend line, not much of a 2-day trend line, but it's a 2-day trend line. It is pegging right on that, attempting to move up. Again, still negative bias there, even more negative if you look at the weekly on the Qs, the NASDAQ 100. What's it doing? Well, it actually moved up more solidly over Friday. It was up 0.50% over double what the S&P 500 and the total market were up. So it's continuing to move up again, backing up potentially unless that move is strong enough to pull the 2-day chart around. But the bias in the market, the weekly chart, is in a downtrend for the Qs. So keep that in mind. If this rolls over and starts going down again, hey, you're going with the biggest of the big waves. So let's potentially look over the course of the next week, if things go negative, to find a good down move. And you might say, wait a minute, how can I make money if the market's going down? Well, I want you to check out a couple of things. P, S, Q. That's Papa, Sierra, Quebec. What is that? Well, that is the ProShares short QQQ. In fact, when the market's going down, PSQ goes up on a 1-to-1 ratio. Now again, not dollar for dollar because it's actually sold in a different amount because they're two different funds, but percentage-wise, it goes up at about the same percent that the Qs, the NASDAQ 100, goes down. It is an inverse fund of the Qs. If you want to see a leveraged inverse fund, that is QID. That is the ultra short QQQ. It actually goes at a 2-to-1 percentage opposite. So if the market is going down, it goes down twice as fast. If the market's going up, it goes up twice as fast. Again, just things to pay attention to if you want to play around and figure out what's going on in inverse funds and trying to make money when things are going bad in the market. When there's a bull market, there's always a bear market somewhere, and that's, of course, in the inverse fund. It's the opposite. When there is a bear market, there's a bull market in the inverse fund. So keep those things in mind. Now, let's lastly go to gold. What's going on with gold? Well, gold is in a decided uptrend. It crossed over going up back on the 13th of June, actually started going up on the 3rd of June. Had a couple of down days around the 21st and the 23rd, and then, of course, thanks to the Brexit, gold boomed up. Then sort of had a bit of a down week following that as the market started recovering and then started moving up again. So what we've seen happen over the course of these last 2-day candles is we saw the market take off, lose a little bit of steam the 21st and the 23rd. On the 27th, big up move. 29th, a little bit of a down move, that 2-day candle, and the end of the week up. So gold is in a confirmed up move. If we look at the 2-day chart, go from the 2-day to the 4-hour, what do we see? We've been talking about for several days throughout the course of the week. Gold was slipping sideways with sort of a negative bent, and then what happened? Popped up at the end of the week. Gold was up 1.53%. Lots of movement up in the morning and some more movement up in the afternoon. So again, gold confirmed up moves on both the short and the long chart. And I encourage you to check out the weekly chart also. You'll see that gold is in a confirmed up move there. So it was very difficult to find an entry point in gold as it was sliding sideways because we couldn't really tell if a dead cat bounce was in the work or if it was going to go down. Well, at the end of the week, it popped up again. That is where we ended the day on Friday as we go into the new week with that 4th of July off on Monday as we start the markets up on the 5th of July, a Tuesday. Thank you for being with us. Make sure that you listen to the weekly review and forecast. We love your feedback, comments. You can find us on Facebook, Twitter, Instagram, YouTube, and of course, the biggest way to find us is go to chartingwealth.com. If you appreciate what we do, please go to iTunes, give us a 5-star rating, say something nice about us on both our weekly video podcast, and of course our daily audio podcast that also includes the audio of the weekly. We appreciate you. We hope you appreciate what we do. We want to make ourselves better. Let us hear from you what you need from us. We'll try to incorporate that, and you'll find being posted, if it's not already there, it will be very soon, the new training that we did on inverse funds, how to make money when the market crashes. Okay, thanks so much. Hope you have a great week and had a great holiday. God bless you.